following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon Eastern Time. Yes, you heard the number, 877-927-6648. Love to hear from you. Wow, interesting session so far today. Oh my goodness. I'm looking at the E-minis. Broke above the 1876.75 high of the 21st of March. This is leg C, but it's a gray C underneath the previous high of 1880.50. It's struggling with this channel. You know, I love to talk about trend lines, how you can take just two lines, and if you draw them correctly, you can get a wealth, just a tremendous amount of information. In this case, it's a repellent zone, and that repellent zone says that unless the E-minis can close decisively above the 1877-78 area, excuse me, making it a really good chance that it will then test and probably break the 1880.50 area. We just got to treat that as resistance. Not only that, you've got in the 120-minute chart a possible E/B in the leg that just moved up. Stochastics at 95%, very good, pulling back a bit. Stochastic MACD is looking very good, making an information. The stochastics just about to pull back from the 94% area. The relative strength index is just turning down a little bit, and I'm looking at this and saying that was outstanding action. Just a tremendous couple of days we've had here. So let's just put it together with the Dow. And if I'm looking at the Dow chart, what we're looking at here is a leg D, a fairly quick peak, A to C to D, A to B to C to D. Now, normally, I'd grab this opportunity to go short, but we were short. We got stopped out for a small percent loss, but a loss nevertheless yesterday. Thank goodness the long size that we had did very well. But most importantly, what I'm looking at this particular stage is how does this relate technically? Well, the 70% in the stochastic is okay. It's rising, so there's nothing wrong with it, but it's certainly not over 80%, certainly not in the 90% area, which is what we like. And the MACD is crossing positive with the day is young. Remember, you look at a candle, and this is what I'll be teaching in my Master Trader series coming up Saturday. This is level 2. This is for those people who have, well, I have a core bunch that come every year, maybe 5-6 years, in fact, continuously. Every year we have a look-back period at techniques that are still extremely valid. We have a look at the period that we're in to say what charts, what are we looking at now? What are the next 6 weeks to 8 weeks telling us? What can we do? What should we be trading? What should we not be trading? What should we be looking at as clues? And that's exactly what we'll be going through in great detail on Saturday, as well as what newer techniques have I been working on over the past year that I've refined enough to say, hey, these are now the final iteration of this at this particular stage of these particular techniques, or they're ideas that I've had before, or brand new ideas that I've been working on, because I like to try things out for months and months and months before it becomes an official Chapman Wave technique. So this Saturday here in the Wellesley area, just about 10 miles away from Boston, from Logan Airport. So it's in the Boston area, and it'll be at Babson Executive Conference Center, 8:30 to 4:30. Go to the front page of TFNN. If you go to the front page of TFNN, you'll see right there it says Master Trader Series Level 2 by Basil Chapman. Join Basil for a full-day Master Trader Series taking place live in Boston Saturday, April the 5th, 8:30 to 4:30, and it tells you what we'll be covering. Let me show you here what we'll be covering. Actually, I've written this down, upside and downside projections based on the Chapman wave, how to use the left side peaks and troughs to determine target resistance levels on the right side. A lot of these are the core things that you get when you go through the CD introducing the Chapman wave methodology, which is really what I'd like you to have to be able to come to this, to have read, or to at least send it overnight so that you start preparing on it. But you have to have done at least one or two webinars, and you must be using the Chapman wave in your studies, if not in your actual practice of the techniques that you use to trade. It's very important, because at level 2, it's a foregone conclusion that you really understand quite a bit, and that we're going to go. We basically go in, and if I say the H pattern, everybody knows what the H pattern is. I don't mind going over it again. There's no problem at all. But I'm just saying that this is the level of the people that come. So it's really fun. And then people start sharing their ideas on what has happened. What has happened to the technique as it relates to their own trading and what they've added to it. Sometimes they come with some really nice little refinements that I haven't discussed, never even thought of, and it's fabulous. And then people share things. Not only that, you meet people that are at your ability and are able to talk things over. When you've got a question, you can just shoot them over an email and ask them what do they think. So it's just, I love it. It's really, it's a wonderful day. We have a lot of fun. We have a lot of eating, and we also have a time to ask those questions that you never get a chance to really ask, even if you call in to to the show right now. I can't really go into it in as much detail. I can't look you in the eye to see whether you picked up exactly what I was saying. So it's let me tell you, it's a treat. I think about it. There's still time. And now let's just look at the Dow 120-minute chart. Look at all the different techniques. Peak D, peak D, peak D, peak D. Now it runs up and it's in a F/C. But the MACD is expanding in the 120-minute chart. The stochastic's at 90%. So far, this is very nice action. So let me go through. The Dow's up 62. It was up quite a lot more earlier. It's at 16,520. It didn't make an all-time high, not yet. The S&P is at 1880.31. It did make an all-time high. The comp index is at 48, up 48 at 42.47. Gold, now this is very interesting. Gold is still down 3 at 12.80. Gold is really struggling to find a base, but it has been kind of going sideways for a little bit. And now what's very interesting about this is that you've got silver up 4 cents at 19.79. When I look at this, I say, okay, what are bonds doing? Well, bonds are down 30 seconds at 1:32 and 19:30 seconds. Let me just show you something here. The TLT, I'm not sure if I've got the TLT spiked up. I have to call that, whoa, that wasn't a C, that's a C. To a peak C, pulls back quite sharply, in fact, with today's move from the 110.39 level. This is the 20-year Lehman T-bond fund. Pulls back almost to the 107.88 level, which is the 200-period exponential moving average support. And it goes to, it's at 108.10. And it made a peak D in the 120-minute chart, and that's going to test the 107.88 level. Isn't that interesting? I've hardly ever seen that. The 120-minute chart and the daily chart have exactly the same 200 period. That makes it very powerful. 107.88 level. That has to hold on any pullback. Now, I've got a leg B in the, it made a lower low. Yep, made a lower low. So this is a leg B, possible peak B in the weekly chart. Still holding well. Repelled at that 108.87 level on the actual TLT weekly chart. And that's going to be very interesting. Look how many times. 108. Oh, this is 108. That this was 107. So now what I'm looking at is I'm looking at the monthly. And that monthly is going to really impact the market if it starts to take out the high of 110.39. And if it does it in April, if it doesn't do it in April, That should be quite positive for the market. So now let me go through a couple of things that I wanted to do this morning. I wanted to go through each one of these indexes because we've got a brand new month. I can talk about the monthly charts. So let's go to the INDU. I also wanted to just mention that copper is at 3.2. That's nice action. I like that action. Dollar's down a little bit, and euro's up just a fraction. So this, I'm calling this B, gray B in the weekly chart. It's D in the daily, but a gray B. What does a gray B mean? It means that until I take out the previous high in this V-shaped pattern. Oh, I'm going to be talking about this. I've got a really nice thing in the PowerPoint presentation, which you will get if you take my course. What I'm doing here is I discuss the speed and what constitutes up channels and down channels, what constitutes very quick buy signal to buy mode, and the V-shaped pattern, the inverted V pattern. And look what we've got here. We've got a beautiful V pattern. Now, one thing about the V pattern is it needs to take out the left side high to be able to spike quite a bit higher. As 16,505 was the high in the daily chart back on the peak F on the 7th of July. Look, it pulls back to the 16,046 level, and then it powers up 500, almost 450 or 500 points, and takes out that left side high, goes to 16,565, 60 points higher. So the speed with which it takes out the left side high and the lettering in the Chapman wave are really important. This is D. So it says, okay, you took out the left side high, doesn't mean a thing. You need to break to all-time highs and then hold it. That would be very impressive. Then I'll look at the weekly chart and say, hey, that's interesting. This is a gray B. The moment, if it breaks 16,588, that previous high of the 31st of December, then I have to consider this is an E/B if it does it in this move. Why don't I just make that a B, and make it as important? Because in the V-shaped pattern, number one, in the stochastic MACD relationship to the previous highs, in V patterns in general, the pattern that I very often call the Groucho Marx eyebrows pattern, where it just suddenly stalls out and it comes right back to an important trough of the V. In this case, it would come back to the 16,100, 16,000 area if it was to fail. I have to consider that there's an alternate count, that you never went at that peak D of the 31st of December. That starting point was way back on the 28th of June at 14,451. Therefore, as long as this pullback to 15,340 is above that, it means that this could all be just a mere extension of that buy mode. So that could make it an E, and then it fails and has a pretty decent pullback. Meantime, what we've done is we've broken out of that dashed line that I had drawn last week at the close on Friday, and that's very important. And not only that, it'll make a leg E in the monthly chart if it was to break to a new high. D to an E means you've got to start getting kind of cautious again. Now, let's go to the S&P. So the parameters to watch, a close above 16,600 this week especially would be very impressive and very positive. And the S&P, we've got music coming up. We'll take your calls as well, but I've got music coming up, which means you've got to break. The Dow's at 53. I'll be back. Basil Chapman, Tiger Technicians Hour, and we'll be back and study these charts.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Going together with what I was looking at and wanting to look at, there was another an added stock that was mentioned in the den by J&J. He mentioned he's looking at, there's a Basil, can you look at DE, dear? For a long, the monthly chart seems interesting. So I did a little work on it. Let me just quickly do this. You know, my 4 Dow horsemen, this GE, trading at 25.83, probably making a peak D here, under 80% in the stochastic. MACD is still good. That 25.72 to 25.61 area in the 2 moving averages, the 9 moving average, and to both of those moving averages, I'm looking at this and saying, hey, you take that out, and then I'm starting to look at that weekly chart, and that's not good. The weekly chart needed to be trading in the 26s, pushing towards the previous high of 26.35 back on the 7th of March. And so far, it's failing to do that. Days young, but that's what it looks like. Number one, IBM acting very, very well here. There's a chance that if it I don't want it just to take out. I want you to close above 195.63, the high of the 26 a few days ago. If it does that, not only does it improve the weekly chart, it improves the daily chart becomes really good, but it improves the weekly chart, and then suddenly the monthly chart says, hey, wait a minute, those candles of the high of 197.17 back in August of 2013 and even 200.94 back in July of last year could become magnets if there's a decent close up in the 196 area. So that's IBM. Now, on the downside, it looks to me more like it's making some kind of a rectangle formation, which I'm drawing right now. It says, watch out, a close below 188 in the next 2 weeks, very poor. So those are the two parameters to watch. Big difference, because if it breaks above, that's a nice move up, and it will help the market. If it breaks down, there's a lot of support, but it's not good action, because it'll drag the market down as well. So Triple M is in leg D, second time it's going to a leg D. It's at 135.83, up 17 cents. MACD is good. Stochastic's at 81%, so that's good. And this is leg B in the weekly chart within that construct of that horrible 24th of January slide from 138, opens at 138.88, hits 138.95, 7 cents higher. And then whoosh, down to 130.22, and it closes after the low. That is a horrible, horrible candle. And it's trying to fill that. And the monthly chart is still in peak E. Technicals are not bad at all. There's nothing wrong there. So I'm going to be watching Triple M very closely. And UTX, of course, the pilot light, intermediate term type pilot light, says, hey, I'm just having a high-level consolidation. I'm actually right now in leg C, all within a kind of a rectangle formation. So watch me closely, because at any point I'm at 117.14, up 30 cents. I only need to go up above 118.50. That's today already. It's been to 117.66. It just needs 60 cents above that, and it breaks out to all-time highs. And then what's the count? That's the big thing about these. Some of these, the monthly's not a problem. It's still leg F. Very quick, E to F, got to be careful there. But what do I count it as the weekly chart? Is this a brand new, is that A, B, C, D, E, F? Is this going to be a G? Or does it recycle and become a new B? I tell you, this is one of the most fascinating periods, because I'm going to know exactly what, if the S&P breaks decisively into the 1883, 84 area, no, it's already, let me just, before I say that, I was thinking that last night. Now I've got to say, decisively into the, oh yeah, that's what I wanted. It was towards the inside track of the up channel. So if it breaks into the 1891 area this week or early next week, without breaking down, that is, I have to consider that up channel, it really is an AB. And in fact, whoa, wait a minute, 1883. This is now leg C. There's no other way I can count it. This is very positive. This is leg, thank goodness I did this, because otherwise I would have been waiting. Yes, this is leg C in the weekly chart. That doesn't mean to say you can't pull back, but it's a very quick A to B to C. And it says that the 1852 level on the S&P over the next 2 weeks, really important to hold. The break under that says, okay, you're going to take a deeper consolidation. It's still a consolidation, not a breakdown, but a consolidation. And then you should get your D. Oh, man, this is such a, wow, I love the market. I mean, there's always this challenge. Now let's get to the DE chart. So this is deer, and the music going on. It's at 91.41 in leg E, I'm calling it, for the daily, leg D for the weekly, and then I'll talk about the very interesting pattern in the monthly, the second leg C. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Let me just show you this. This is, we talk chart patterns here all the time, and the importance of certain techniques that we all have. The 2-minute E-mini chart went to a peak F and then a beautiful doji at the top. The MACD and stochastic started to fail, and it pulled back from a high of 1877.25 to where? To the 200 period exponential moving average right there. 1870.69 is that level, and it went to last move down was to 1870.75. And now it's trying to rally. So remember, these patterns, they repeat in any time frame. So when I'm looking at this particular chart here of deer, a deer is looking like, at this point, I want to be a little conservative, not call it brand new A, which implies B, C, D still to come, but call it an E. Let's see how it pulls back. I can always make it. I don't have it. And the question again was looking at it for a monthly chart. So D in the monthly chart says stochastic still a little weak. MACD is quite good. In the weekly chart, go to the monthly chart, and all of a sudden you got the chance of a parallel, an overlapping wave. And that says, boy, if deer goes above 95.60, that's 4 points away. So it's quite a bit to do in the next couple of months without taking out the 87.51 to 86 area key support. That means if it does it in this, if it pulls back and then starts leg D up in the shorter term and passes this 95.60 area, that's going to be a powerful move. So all I'm saying is that I would wait. It's a little real high risk reward right now. I'd probably say let it pull. If it doesn't pull back, it doesn't pull back. But if it does pull back to the 90, it's a 91.40, to the 90.70, to the 90.20 area and holds there and holds steadily, I say, hey, that's a chance that you can nibble on that. Start a position there, because if it goes higher after that, that weekly is really going to improve. So that's the only way I'd look at it. Or you could just nibble on it here, saying, hey, leg E could pull back very sharply, but if it's an A, it'll have a mild pullback and then make B very quickly. And I could even add, if it pulls back and then makes another high above, say the high of today, if that's the high, 91.98. So I hope that helps you. Let's go to Joe in Boston. Joe, how are you?
I'm well, Basil. How are you?
I'm very well, thank you.
Good. Yeah, I wanted to look at P&G. I've got some options that expire at the end of June. I'm in the money, but it looks like it's trending up. I just wanted to know what you think might be my best target within the next 2.5 months.
Do you have, so you have options that go out to what, June, July?
Yes.
Okay. You see, that makes a very big difference, because there are a couple of things. Yeah, this is one of the very tricky things that we've been looking at that has been making fund managers who have been in the business for years and years and years, who are getting a bit nervous. It's just confusing to them, because why? How on earth can you see Triple M and UTX fairly close to all-time highs, and yet you've got Procter & Gamble, a defensive stock, doing so nicely? Well, the fact is, in the patterns that I look at, there's a pattern that I call, it looks like an uppercase letter A. I'm going to type it in here. I actually call it the Eiffel Tower, because it looks like the Eiffel Tower. It goes straight up and it goes straight down. So I'm going to make it a little different color. I'm going to push it to 36. That's pretty big. And now I'm going to drag it over. So if anyone's watching the Tiger TV, you'll see that the low in Procter & Gamble, trading at 80.56, down 4 cents, made a low at 75.20 back in the week of August the 4th of 2013. So that's 75.20. Let me just put in 75.20. So a whopping move, straight up, a single leg move that went to a high of 85.82. So that's 10 points. It's about 12%, 85.82. And then what does it do? It turns around and says, I can't take the strain. This is not for me. I'm going downhill again. So it goes down to 75.26. By 6 cents, it doesn't break the previous low. So 75.26. That still comes under the auspices of that H pattern or the arch pattern, and says it was a successful test. There should be a bounce, and that bounce could take it to the previous high peak, and that was the peak on the 24th in the weekly chart, 24th of January at 81.70. So at 81.70, so that says, so now tell me what do you have, what strike price?
Well, I have 65.
Oh, you have 65, so you are well in the money, huh?
Yes.
Okay, so when someone does their own work and they do so well, I'm always very reluctant to add my 2 cents worth. And I'll tell you why. My 2 cents worth could be a losing proposition, because I'm coming to it with a slightly different I'm not coming to it with an agenda, but I'm coming to it with a slightly different objective. And the objective here is just to do an analysis, looking how high it can go and how low it can go, what's happening in the monthly chart, because that's the larger trend that you'd be wanting to look at. But you're the one that had the trading plan. So in your trading plan, did you have a specific upside target, or did you just feel this was ready to have a very strong rally and that's what you wanted to participate in?
That was it. So I thought it was going to go up, and now it's at the point where I'm in the money, but I'd like to ride it kind of as long as I can. But so I was thinking it might get back up to 84, but I don't know.
Well, one step at a time. It has that 81, that mid 81 level is going to be. That's the first real test. But I had another question for you, and that is, do you have one or you have a number?
I just have one right now. Yeah.
Okay, because if you had more than one, I would say to you that is a huge gain that you've got in an option. And, we've got an option hour coming up in a moment, and it's a fabulous, fabulous show. But I'm going to just tell you that it is unusual in most market scenarios to see 12, 15-point gain in a call option looking out in this kind of market when you're in if you were in a different kind of a stock like a high tech or a biotech before, I would say, hey, you know what? That's the best way to trade those things. But you've chosen a stock that's shown incredible whippability. It's gone from 75 to 85 and then back to 75. So my suspicion right now as a defensive stock is that this is probably going to stall out between somewhere where the high of today, which is 80.84. So somewhere between 81 and 84. But sorry, between 81 and that 81.70 level that we were looking at before. 84 is what you wanted, but to get to 84, it means that it has to now do exactly what it did twice, a third time. And you can see that it's now taking longer, so it's not a straight line move. In fact, in my Master Trader series that I'm doing on Saturday, I'm going to spend some time on the difference between a straight line move and the one that we're looking at right now, which is had a peak A and then it went sideways, and now it's got a leg B. It's almost like a one-to-one measured move in the weekly chart. Here's my recommendation. So that's the reason why I asked you to add more than one. If you have more than one, we're at peak E. Leg E in the daily chart, and the MACD is good, but stochastic's only at 78%. And it says, you know what, in the next 3 days, you might see it might get to the 80, it might get to 81, that 81 area. But it's in the area that if you had two, I would say this is where you'd start to take one off. In fact, right now, I'd say to you, take one off. But you've only got one.
Let me tell you this, too. I already took off half of my position, so I've actually got like Tom likes to say, I got all my principal back. And I've already
that's
got a profit,
fabulous.
So I'm
Great.
feeling like I'm kind of free rolling on this.
That's a beautiful technique. Now I can think of it a little differently. I don't want you to give up big gains, but and 79.78 is the 9-period moving average support to 79.51. And then you get to 78.97. Well, that's only 2 points, 2.5 points. But in options, on a percentage basis, you'd be giving up quite a lot on a percentage basis. So now that you've got it, you're in a little different mindset, because I love the action of the weekly chart right now. The monthly chart is just stuck in the middle of everything. The technicals are weak, but the price is acting quite well. So you've already taken profits. Here's what I'm going to recommend. If there's a pullback tomorrow, both in the general market, but especially in Procter & Gamble, and it takes out today's low of 80.30, then I'm going to say to you, start watching closely, because if it... I don't know how you feel about a 1 to 2 point decline here if the upside is going to be stuck between 81 and 82. So you've got yourself about a point upside, but you got the potential for a point to a point and a half downside. So when I look at it that way, gosh, I would hate to say to you, get out of your final position because it's in leg E and I haven't even made a peak E, and it could recycle the whole bunch of things that can happen. But I don't want to see you give up more than 2 points of this big gain that you've got. Okay, there it is. This is your free ride, so you can afford to give back a little bit. I'm going to say, if we don't get to talk to one another, if at any point in the next today is Tuesday, by Friday or Monday, if Procter & Gamble has not taken out 79.51 but is still holding here and has preferably gone to the 81 area, that's great action. But if it starts to kind of curve down and it's really testing this mid-79s, and then it starts to take it out, I'm going to say to you, I don't know if I would want to risk anything more than that. So it's a point. Let's call it 1.25 points from here to the downside. If it was me, I'd say, you know what? I've had a really good eye for Procter & Gamble. I've got absolutely, in the daily chart, that is pretty much the maximum to within a point of what I would have thought was a test of very big strength. I don't want to risk more than that because it's been a great gain. I'd like to keep that gain. Why? Because if it does pull back and then it starts to make 78.50 to 78 support, and then it starts to rally again, you could do the same thing once more. You could buy the call. But I don't want you to give up too much of these great gains, even though this is your second position. So that's my stance. Stay in the trade. If it starts to test 79.60, 79.50, and then closes below that, I'd say to you, you know what? I'd be prepared to take off that last position. But if it's holding real well, make it a trailing stop. If it goes to 81.30, make your stop 80.30. Make it like a 1 point stop on this position. You could make it a little bit more, 1.5 points, but this is the area right here. And if you look at your charts, you'll see that the 81.70 was the high of the 24th of January. My technique says in this H pattern, it's actually like an inverted V. A bounce should take you to the next peak, and that peak's at 81.70. And in this move, if it breaks above 81.70, that's really positive, and you will still be in the trade. So I'm saying to you, 1.25 point, maybe 1.5 point stop from here. If it starts to rally, raise that proportionately as a stop. And if it gets to the 81.70 area, that's going to be where it tells you a lot of important information. But, Joe, I have to congratulate you. You got in fabulously, and you've got out of one position great. So I'm even prepared to say to you, you know what? Throw out everything I've just said. You're the boss of this particular position. You've played it beautifully. I don't really actually want to interfere. I'm just saying if it was me, that's what I'd be looking at. But
that's perfect, Basil, because actually that confirms kind of what I was thinking. I was willing to let it go back to 79.50 and on the potential that it could, that if it holds, it could go to 84. But you're right. If it breaks below 79.50, I'm not sure there'll be enough time between now and June for it to kind of do what it needs to do to get back up there. So I'm willing to take another, the point and a half down to get the 3.5 points on the upside. But
they were on the same
that analysis, and that's kind of what I was thinking. So you've actually confirmed what my thought was. That's
right. Just before you wrap it up here. You see the 120, I had a feeling I meant to do this before. A, B, C, D, E, F. Is that an E and an F? 83, 80. Yes, it made an F in the 120-minute chart. So this is exactly, right here as we're talking, this is that exact moment that's going to tell us how much internal strength is there from here if there's a pullback, how much residual strength is there to break out, push nicely into 81s. Hey, Joe, fabulous trade, and good luck. Let me know how it went.
Thank you so much, Basil. Cheers.
Thank you very much for calling. That was Joe in Boston. We were looking at Procter & Gamble. A great stock right here that we can come back to, and Caterpillar. We'll be right back. Dow's up 58, S&P's up 7.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here, and we're on Tiger Technicians. I had a question to Dan. Gringo said, does EEM have influence on Procter & Gamble? So I understand there's a relationship, a defensive stock, just as you would look at the EEM as sort of a counter-trend ETF based on emerging markets. I have to do the chart by the chart right now. I don't want to use that kind of relationship. Now, there's been a huge spike from the 38 area to the 41.37 level, 10%. In the EEM, it's trading at 41.37, up 36 cents. And I've used a phantom peak here. I'm calling this leg C just to be ahead of the game because there was a double top on 2 candle bars. Peak A was at 39.43 on the 18th, but then I've got parallel highs 39.45 on the 21st of March, and on the 24th, 39.45 again. I've used this as a parallel, Chapman Wave parallel, a phantom peak. Why I'm getting to leg C, I want to be a little bit early based on other criteria on the 120-minute chart, having pulled back at that point, even though there was a parallel high. It just gets me a little ahead of the game, but it's a strong leg C in the weekly chart. Monthly chart is not great yet. So I wanted to just mention that because it was a good question. Now, let me just do this in the limited time we've got because we're about to wrap up today. I'll be back later with Tom, but in the meantime, let's look at the, and don't forget, just a great show, a great option show coming up, Options Hour, And I recommend that you listen, because I think it's a teachable moment. Absolutely. Now let's just go back to this. The question I had here in the break, Julie asked, my understanding with your two wave counts for S&P, that's the two letters, is that it could go either way. Do we wait on sidelines? Are we close to a top? Or is this the beginning of a new rally like we saw so many times after the S&P sell-offs? So let me put it this way. I'm trying to allow my stock choices, and we chose two stocks today to add to the long positions that are kind of right under the radar. And they're not doing that great now, which tells me that if there is a pullback, these are the stocks that could actually start to move higher, and they actually have quite nice chart patterns. Yeah, it's a risk, but it's a risk I felt that I wanted to take in select. My bigger choice was Ford, but it looked like it was going to gap up, and it certainly did gap up. It's up 60 cents at 16.21, up 3.97%, and had a great call from one of the subscribers talking about it. I didn't want to chase it and look at, maybe that's exactly what I should have done. Ford, let me show you. Ford is acting very well. Wow, look at that weekly leg C. Monthly is improving, but look at the daily leg D. What a whopping move to the upside. So, okay, that's what happens sometimes. Now, let me just go through this steadily. I'm going to go to the SPX because I think that a lot of people look at the S&P. SPX, I've got F/C. The MACD hasn't yet crossed positive. The stochastic's only at 47%. It made a new all-time high. But in the weekly chart, it went very quickly. Peak A, peak B, leg C, but not very much. They're all were 1883s, and now 1884 is the high. So when I'm looking at this, I say, okay, what is it telling me? It's telling me there's a cluster formation. Cluster formation says you can be spring-loaded here to break to the upside, but don't anticipate, rather than prepare for both contingencies, that it could be a repellent or it could be a breakout. And because I don't have it yet, I got the stochastic at 84%. That's good. But the MACD is just trying to turn. It keeps being deflected lower. So I've got to be prepared that there could, in fact, be a snap to the upside. So there's another pattern, a W, a very strong V, two Vs, making a W pattern in the daily. Let me make it real clear. A close by Friday, a close under 1864 to 1862 would be not very negative, but it would be negative sideways action. A break to the upside to the 1891 area, very positive. Thanks for being here. Don't forget my opening call. Check it out, front page of
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.